All right. Here are, this is actually a trade that I was going to take, and I blinked. Actually, I forgot about it. I think some of you may be in this trade, but lean hogs. Now, these are all, this is a buying tail, this is a selling tail, this is a buying tail. And let me define the, the official definition of in market profile parlance of a buying tail or a selling tail is two TPOs at the top or the bottom that don't have any other TPOs around it. Now, that's too fine a point on it for me. The ideal buying tail, if you have to strain to see it, ignore it. This is a clear selling tail. This is a clear buying tail. This is a clear buying tail. Yeah, this is a stretch. This is a selling tail. This is, etc. And again, it's about what are you looking at? You're looking at the auction process, and you're reading rejection, you're reading conviction, you're reading the fact that prices were deemed unfair once, twice, 3 times here. The market is telling you something when it spiked up here and closed here. Now, most of the time, if you're right, and sometimes this is what I will trade. I'll trade it this way. If I go short here, I'm not going to put my stop up here because I'm trading market condition. I'm trading the fact that this is a selling tail and it's going to be a selling tail. So I'll put my stop below this high. Now, I'll give it some room. I won't put it right here. But if this is going to be a selling tail, price should not take this high out. And if it is, it invalidates the reason I got in the trade. It has nothing to do with money. It's about market condition. Now, it's perfectly fine to place your stop above this, but if the trade is going to work based on the fact that this is a selling tail, it should remain a selling tail. And it should not be deeply retraced into. We'll look at some more examples of this because I think this is a very powerful tool. The tools that we use are the visual artifacts of this auction process as opposed to, oscillators and magic numbers. You can only focus on so many things. So I think your focus is well served and well spent on understanding what the market is doing and looking for signs from the market of conviction or acceptance or continuation or change in trend. That's what trading auction market concepts are about. Now, this is a daily chart of beans, and you've got buying tails and selling tails all over the place. Now, I want to show you another view of beans. Now, this is beans back this summer, and this is a bar chart, right? This effectively was a false breakout trade. Now, let's go down to the profile chart, and I want to show you this. Now, I'm going to change this to November beans. And this was that furious run that we had up. And then you had beans attempt to trade higher here. And then they formed this auction in September up in here. Here's the minor auction. Now let's do this. This is a daily chart, and this is September. All right, now these are individual sessions, and what the way, here's the larger auction, and then here's the trading that began right here to migrate lower. And here is a beautiful example of a false breakout trade. This was right here. This is 9-4. The market opened higher, spiked up in here. I think this is the day session open actually right here. And then it began migrating lower. Now, if you were trading beans, and we were all looking at beans and looking at the markets, you know, back this summer, and there was just every single day we're talking about droughts and all this other stuff. Always default to market structure. It will not lead you astray. My alert just went off. Copper's on the move up. We'll take a look at copper later. But I want to show you now, if you're looking at the profile view, here's the profile chart. Now let's look at the bar chart. All right, here it is daily. And here is, this is September 4th. So here's September 4th. And this proved to be a selling tail on the daily chart. And this is a 60-minute chart. We can go down to 30 minutes because that's typically what we look at in the room. So let's do that. Okay, perfect. And look, you have a nice balance area that forms. And then this is the first half hour of trading in the day session. And on a 5-minute chart, you have this selling tail. So this is occurring at following a gap up in the all-time highs in beans, and you have a selling tail that occurs. So if you were to sell this, have sold this at 1780, you had about a $250 risk at that point in time. Now, a $250 risk per contract doesn't necessarily tell you it's a good trade or not, but if you're risking $250 to make 1,000 or to make several thousand, it's a good trade, even if it doesn't work. But this is an example of a selling tail on a 30-minute chart. Let's see if there's one on a 5-minute chart in the same time frame. Now, technically, in market profile, this would not show up as a selling tail in market profile. On a bar chart, it most certainly is a selling tail. Now, this happened at 3:05 in the morning, so I don't know how much good that would do you, but just for the sake of the example, this is a selling tail. Chris, you say it's a 25% HVN, the light blue or gray area. Well, it's, let me find it. It's gray on my charts. I don't have a light blue area on my charts. Maybe it's light blue on your screen. But this is, I'm not sure. There's only one shaded area on my profile charts, and that is, that's the high volume node. So the point here is that these selling tails and these buying tails give great information, and they are actionable, executable, tradable artifacts. But you got to put them in a context. All All right, here's the euro. This is a great example. Actually, I have this over here. So let's look at the euro. Okay. Now, if you, and this is something else about a bar chart. What is this? This is all one auction, isn't it? This is a balance area. And here are your unfair lows, and here are your unfair highs up here. Now, the further along the time scale you go this way, the higher the confidence you can have entering trades here or here and knowing that that sharp move is very likely to occur. So there are two ways to look at this. All right, this is important to note. If I'm looking at the euro and I see conviction, this is a mature situation, you know, let's say we don't know it broke up. And you're below the high volume node. Now, you've heard me say this many times. I will favor the initiative trade on the price side of the high volume node in a mature profile in the absence of additional information. Now, in this particular instance, the euro had been up. So the larger degree trend was up. So that would be a reason to be looking for longs. But frankly, I'm usually going with conviction. So I'm trying to, and I will try, instead of waiting to sell down here on a break, if I see conviction like this, I'll sell it. But now when the market comes down in here, I'm expecting it to continue. And if it doesn't, I'm going to get out. I'm going to tighten my stop. I'm not going to let this market come all the way back against me. Again, because I'm trading market condition. I'm looking for the initiative situation. And if it's not initiative, it's something else. And something else was not what I wanted to be trading. So I'm out. On the other hand, if I'm on my game and I see this market come down here and it trades down here and then it closes here, and now this is a 30-minute chart. It's not like this is a 1-minute bar chart where you don't have time to, find the mouse before you have to react. But if this market trades down here and I can see that it tests these areas, it closes here. So now I'm thinking, I don't really want to see a selling tail form here, because if it does, then I'm probably wrong. And not only am I probably wrong, I'm probably on the wrong side of the market. But this is an opportunity, if you recognize this, to get out of your long, get out of your short position and get into your long. Yeah, that's why we talk about this being an ongoing flow of development. Each piece of information is a new piece of the puzzle that changes the probabilities of what's likely to occur next. If there's conviction down, the probability is it's going to continue to one degree or another. Well, if it doesn't continue and it hits this level and it potentially forms a buying tail, then that changes the probabilities. It's like playing poker. You may, 5-card draw, if you have, you start out with, 2 queens or 2 jacks, that's a pretty good hand. And then if the next card, you get a 2 of clubs, and then you get the 3 of spades or something, then it's not as good. So every piece of new information requires an assessment of what's likely to happen from an auction market perspective.